think this piano player's name is Sam. Play it again, Sam. All right, good morning. Come on, Sammy. All right, there we go. 88 finger Sammy, everybody. All right, welcome to QuantBox Live. It's your opportunity to get your macro on. It's 3 hours before the stock market open. That makes it 6:30 a.m.-ish on Wall Street. Let's uncover your best fundamental investment opportunities across the global markets. My name is Wayne McDonald. I am the founder of QuantBox.co, as well as a Harvard-educated macroeconomist. I love macroeconomics because it sets up the fundamental trends, and I am a trend trader. So I kind of need to know what's going on for direction. Why is money moving up, down, or sideways? And then I open my charts. If you're watching this on YouTube, this video is delayed. You're probably watching it at 10 o'clock in the morning, 11 o'clock in the morning, maybe noon. Well, hey, man, like I said, it's 6:30 as this is being recorded. And then, of course, the video recording is uploaded to QuantBox by 7 a.m. So you're hours and hours and hours delayed. So why don't you visit QuantBox.co and give it a try? It's not even $8 for a trial. Not even. Come on now. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money cannot afford to lose. Big question. Did my video just get bigger or smaller? I was trying to get it smaller, and all of a sudden now it's way big, right? Yeah. No, but yeah, we don't want bigger. Okay. We don't want bigger. I'm trying to get it to focus only on the screen and none on me. But anywho, yeah, there's the disclaimer. So let's log into QuantBox. So the last video posted was yesterday. So today must be Wednesday, the 21st of June. That means we're getting close to the end of the quarter. Quadruple witching is coming up. But also today is the first of 2 days of testimony by Powell, who probably won't add anything new. People are very, very confused about the last Fed meeting where they paused, but then they were very aggressive in saying, oh, we're definitely going to raise interest rates again. So everyone's like, I'm confused by this. He tried to explain it. And he said, well, we raised by 75 basis points, multiple meetings in a row. Then we raised by 50 basis points, several meetings in a row. Then we raised by 25 basis points, several meetings in a row. Now we're pausing, but we're not done. And people are like, I don't get it. Well, he could just say, well, we're being prudent and maybe we'll just raise every other meeting if it's warranted, but that's what we're thinking. Now, some central banks, they just raise by 0.125, they raise a half a raise. The Fed might be thinking, let's start a new process of pause, raise, pause, raise, pause, raise. Who knows? But apparently, people are very confused, so they're going to ask him questions that he can't answer, and therefore, end these meetings even more confused. One of the things we need to be watching, of course, is seasonality. But nonetheless, let's get on with it. Let's go into the QB Pro. Whoa. Oh, interesting. I'm getting that Google thing. That's a Google issue when it does that. Hang on. Hang on. Hang on. I'm going to have to change. I'm logged into, let me try logging into this Google account over here. Yeah, a little Windows alert. All right, so let me refresh this. And let's see if I can go in here. Oop. Interesting. All right, let's see if it'll work this time. It's not allowing me to log into that account. It's not interesting. All right, well, let's try over here. Trying a different browser session, see if that helps. It's not us, it's Google. Yeah, it works tickety boo. So all I did, if you get into that situation where it's not letting you onto the Google Cloud, remember it's not QuantBox because you're already. I was logged into QuantBox, but it won't let me into the cloud. So what I did is I opened just a different browser session, made sure I was logged into the right profile, and it worked just fine. So that's an issue of a Google. All right. So let me bring the webinar back to see your pretty faces. Yep. Cool. All right. Well, congratulations to Jim, who I know was on Bitcoin yesterday, and that was the biggest winner. Biggest winner today. Yeah, up. Holy smokes. Is that 8%? Shut the back door. That's amazing, huh? Yeah, well, if you like volatility, I don't like volatility. So, yeah, great. So big move on Bitcoin. Is that indicative of risk on? Well, that's where we go to the scatter plot. And if we remove Bitcoin, we get a better picture of what's really going on. Now, you're an astute scatter plottist, I'm sure. So you're trying to calculate the slope of the mean. Does that look about right to you? What do you think? Is that about right? When you get uh, when you get a slope that direction, it's good. And then I'm trying to. These are outliers. These are normal. Okay, and what I'm eyeballing is variance, and then calculating standard deviation. So actually, this one might come down if we were going to standardize the variance. And so I'm very quickly doing regression calculations. But nonetheless, that's what you want to see. What you don't want to see is a slope this way. That's a negative slope, and that's bad. We don't like negative slopes. We like positive slopes. And anyway, so that's kind of how I measure this market, and that is okay. That is risk. Well, it's just as it should be. Whether it's risk on or risk off is sort of irrelevant. It's as expected. That's what we're looking for. So it seems like most yen pairs are up today. Most dollar pairs are down. Okay. And pound, pound, pound. See all those pounds? Let's do this differently. Let's get rid of that. Let's get rid of the indices. Oh, oh. We're doing work right now that I can't tell you about, but we are doing work right now, adding new features. Lots of new features, in fact, lots of amazing new features. But there are engineers working on the back office. So if these changes are messing with this, yeah. So why do we have to have commodities? I wonder why that makes sense. Um, then if there's a little hiccups along the way, it's okay. It'll be fixed. So you got to leave indices in. You got to leave commodities. That's a weird error. It has something to do with, I think, crypto. Anyways, okay. Well, let's look at this. Um, What does this tell us? Risk on? Not really. Not really. Nope. So I can't really give you a gauge of risk on or risk off, but we do. Um, let's see. We see some U.S. dollar strength. U.S. dollar strength. Dow down. S&P 500 down. Gold down. Nasdaq down. slightly or more than slightly, but that would lead to dollar strength. You see that? And then everything over here is neutral, huh? Oil having a good day. Kiwi doing really well here. Kiwi strong. If we had some miners in here, Kiwi strong. Okay. Kiwi strong. Over here, Kiwi very strong. Kiwi strong. Kiwi strong. Okay, cool. Kiwi strong. So we can learn quite a bit from that. You might want to look at Kiwi today. Take a look at like a yen pair. Okay. The best time of year to own this asset is likely to be closer to the end of the year. So we're going into the summer where it kind of composites out. But right now, fundamentally, it's doing really well relative to Japan. The market or the retail market is heavily short this, which is strange, right? That's retail. They don't want to own Kiwi, I believe is what it is. But on the institutional side, okay, 80% of institutional traders are short the Japanese yen. So being long this right out of the gate is okay. And then Kiwi is actually 50-50. Okay. It's kind of 50-50, but that might be changing. Look at the interest rate differential. It's a nice little carry. Interest rates are 5.5% in New Zealand, and it's up a 1/4% in the last hike. Very, very low unemployment. But look at Japan. I mean, it's unbelievable. A three handle on unemployment is crazy good. I mean, true full employment is like 4 to 5% unemployment, right? Um, so 2.6 is crazy. There's just nobody out of work in Japan. Absolutely nobody. 3.4 is amazing. So this is astronomical. But looking around, look at inflation in New Zealand, still a little too high, but it is falling down 0.5%. So the economy is improving there. This is good for their economy. With all the yield curve control and the devaluation of the Japanese yen, they still only have 3.5% inflation. They can barely create it, even when the world is drowning in inflation. Japan can barely do it. Okay. Here's the issue: negative GDP growth, huh? Yeah. Negative GDP. So that's going to have to pick up. So when we look over here in the scorecard, New Zealand needs to improve on GDP, inflation and unemployment, although they're only negative relative to this amazing like Japanese yen. Like that's great, great. Everything else favors this. It's a pretty good buy. So what we need to be watching is whether money is going to be moving toward the New Zealand dollar permanently. One of the things you track, of course, is this. This is essentially the commitment of traders report we get from the CFTC, the Commodity Futures Trading Commission. Theirs look like a spreadsheet. This is what ours look like. There's a beautification going on. This is going to change its look slightly to make it more readable. Is everybody okay with that? Yeah, everybody say aye. Aye. All right, cool. So that's already happening. In fact, it's already done. But there will be some slight changes here to make it easier to read. But what we're looking at is um, how bearish are institutions on the Kiwi. So I'm trying to get my drawing tool to cooperate with me. Okay, so the question is, are we here And is this in a process of moving here? Like if things changing, this is one of the things that you need to be doing with this chart. Are they moving? And if so, if it moves to the left, it's bullish. And so I'm pretty sure this was to the right and now is slowly moving to the left, and that means money is moving toward that asset class. Okay. So, anywho, that's what we're trying to ascertain. Where does it fit in the world relative to everything else? Okay, Kiwi yen is an okay buy, but you want to kind of look at everything. Aussie versus Kiwi, that's neutral. Kiwi versus dollar, that's neutral. Pound versus Kiwi, neutral. So you have to think about what you believe is happening with the Kiwi. Is money starting to move toward it? And if so, that should create Kiwi strength. And therefore, what would you pair with it? Now, this is where you have to start mixing your biases. So, are you okay selling the yen? The answer might be yes. But what about like Kiwi dollar? Um, where to go? Here we go. Kiwi dollar. Well, it depends on the context of what's going on. So if you're buying Kiwi yen, we could assume that there's a risk on scenario. The stock markets around the world are going up. What happens to the US dollar if all the stock markets around the world are going up? Well, it'll weaken. Oh, so Kiwi yen is currently a buy, but Kiwi dollar is not. So that could change. And therefore, you might want to take a look at that down the road. Okay. Or find something else that you believe is weak. I'm okay with just sticking with Kiwi yen, and the reason with for that is the announced policy, the current policy, the affirmed policy of the Bank of Japan seems to be one that is going to weaken the Japanese yen long to medium term. CAD yen, sorry, Swissy yen, CAD yen, Euro yen, Kiwi yen, and then the next one's Aussie yen, pound yen are lagging. Maybe these are opportunities for you. By the way, did you see the the UK inflation numbers that came out? Ooh la la! Whatever they're doing, it ain't working. So they're gonna, that could attract some in the first bit. That's bad for the UK. Let's go here. It's bad for the UK because they have persistent inflation. But in the longer run, it might be good for the pound, for the Great British Pound, because it could attract investment because of higher interest rates. The Bank of England might have to very seriously raise interest rates higher than it is now. That's all. So, where are we looking at the pound index? This is the Great British Pound versus everything. And we are at a key level of resistance. And so the knee jerk reaction today to the horrible, what was it, 8.7? Horrible inflation level. Okay. Right. The first reaction is down, but the longer term reaction is, oh, wait, the Bank of England might have to raise interest rates to like 7.5%, let's say. Oh, really? Well, that's a winner, winner, chicken dinner because think of it like buying a bond. The Bank of England's going to pay you back, right? Yeah. So you can lend them money. While they lend you money, they're going to pay you a high interest rate. And while you're holding this, it's a debt asset. You sold them, all right? You bought a bond, essentially, not really, but you bought a bond from them. You're loaning the Bank of England money. And then as you're holding it, they keep paying you higher and higher interest rates back. Your income actually goes up. So, like, if you lend um, the UK money by buying a bond, one of the things it says is, okay, you lent us $10,000 and we will pay you 5%. Well, as time goes by, if the UK raises to 6%, okay, let's just say literally the next day, the Bank of England raises interest rates to 6%. What happens to the value of your bond, of the first one? It falls. It's very sensitive to interest rate changes. So this, right? You can't sell it for 10,000. You will have to lower your price because this 5% is fixed. So, like, I don't want to buy your 5% UK bond if I can go to the Bank of England today and get the exact same bond, but it pays me 6%. There's a big difference, right? So if I'm going to buy your bond to make me indifferent, you have to lower your price. So that's no good, right? That's no good. So whoever lent the money in the past just gets paid and they never get a raise. Okay. Now, with Forex, okay, in the United States, you can lend essentially the Bank of England, okay, the Bank of England. You can lend them, let's say, the $10,000, but in the United States, you can have 50-to-1 leverage. So it either costs you less or you can lend them a lot more. So that's the interesting thing. You can lend them $10,000 and have 1/50th of your actual money risked. But also, right, by lending them, it's not actually cash, we'll call it spot cash, by using your Forex account to do the exact same thing as lending the Bank of England a bond, buying a bond and lending the Bank of England money. You can just do it through the cash Forex. And then when interest rates go from 5% to 6%, you just get a pay raise. And the interesting thing is, because of that, the value of this initial asset, your original trade, is probably up and you get paid. You don't lose money, you make money. And you don't collect 5% now, you collect 6. So you don't have any interest rate risk that way, because then if they raise from 6 to 7, you get paid too. You get an increase. Also, you don't get paid quarterly, you get paid every day. Okay. So, anywho, lovely, right? Lovely. Lovely till you mum. So, your big choice now is, what would you trade against it? It seems to me yen is generally weak, huh? So, now we can go to a yen and you ask yourself, is this a good price? Is this a good time? Because that's the only thing your chart tells you, is price and time. So, yesterday, had a great opportunity. Let me scope this out technically. Okay, I already have it marked, of course, but okay, killer little buy zone. So I don't know what's going to happen in the future. I don't know if, because this is a huge profit taking zone. So we could do one of these things. We could. We haven't yet. We could. And this is the right price for that to set up. But nonetheless, what is the trend? And and remember, this is more than technical analysis. We have the central bank here purposely weakening the Japanese yen. Purposeful intent. That is the intent. So at least you have the Bank of Japan helping you. You don't know anything about the RBNZ, but at least the BOJ is helping you on this move, right? So your move today or the rest of the next week could be when it doing these on smaller time frames. What do you stink? Smell like a plan? Take a look at some other opportunities. Here's Kitty Cat. Okay. So I did the exact same thing yesterday. Same, except I'm using the top of the range as support. And now the idea, I can't lose money. You can see my stop's already at break even. Uh, if it does this, I get paid. Cool. I don't know about CAD. I kind of want the US stock market to go up today and oil to go up today if that one's going to work out. We can look at euro. Same. This is a different chart template, but it's the same idea. Okay. Off the 21. Okay. Maybe. Is it a great trade? I'll tell you tomorrow. Okay. But it's just a trade. But the idea is I'm trying to work with the Bank of Japan. Okay. And another great trade is this one right here. Now, to be honest, I thought I was on this. I must have missed an order. Thought I was on this one. I don't see how it would have been taken out. Interesting. I thought I was on this one. Too bad, so sad, because this one works great. Well, if here's the interesting thing is if the US stock market comes down, very often the dollar strengthens. And we already know the Bank of Japan is set in a yen weakness. So kind of interesting. But you see, same. Buy off the 21, buy off the roll reversal, long and gone. Working with the central bank, not against it. Okay. Don't fight the Fed. That is so negative. How about this? Help out the Bank of Japan. Help them. They need some help. They're requesting your help. Please, Jim, please, will you sell the Japanese yen for us? You're like, okay. Right? Because we're kind-hearted people. So anyway, I'm trying to help them out. So my risk here on this one now is that we've topped out. So I don't know what I can do. I don't know what I can do. So I'll have to pay attention. There's going to be a lot of volatility this afternoon during the testimony. Be aware of that. Also, if you are a member of FX Bootcamp's day trading group, we're scheduled to meet today at 4. But I'm working with the Morgan Stanley Wealth Management team at a charity event. So I will be working at a food bank this afternoon and will not be able to lead our day trading group session at 4. So I apologize for that, but I'm going to put some food into the bellies of hungry families in my community. So that's it. So please be advised of that. I will, if I can be smart enough, I'll try to delete the meeting, but you're probably getting reminders to attend the meeting. But heary, I won't be there. So have a wonderful trading day. Peace on earth. May the pips be with you. May your profits be above average. I'll see you soon. Cheers, mate. Ripper.